What's up, guys? Welcome back to the channel, 10 Baggers. Today I'm going to be talking about Clover Health, ticker CLOV, and why I think it's a great investment and why I've been loading shares. I want to apologize really quick about the audio in this video. It hasn't been as good as the other ones because I broke the cable somehow to the microphone. I already ordered another one on Amazon. I know my video production qualities aren't amazing as it is, so I hope you guys still stick around and learn why I think Clover's a great stock. Yeah, so let's jump into the video and let me know what you think. Hit like, subscribe, help a brother out, and yeah, so let's jump into the video. Okay, so just a quick note on the recent volatility. I'm honestly speechless on what's going on in the markets right now. It's not like anything we've ever seen, and I really don't know how it's going to play out. I mean, the market dropped quicker than Bill Clinton's pants after an internship dinner, and my massive gains were gone faster than Trump's toupee in a hurricane. Just a little bipartisan humor for you on this Sunday morning. All that being said, though, overall, I'm bullish on my own personal investments for 2021. But in the short term, it's tough to know what the overall market's going to do. If you would like to build a position in a stock, now would probably be a good time to start. But I wouldn't go all in until we see how stocks move through February. It's always good to leave a little cash on the side to be able to jump into good opportunities as they present themselves, or to even be able to lower your cost basis in a stock you're very bullish on. Okay, so now we're going to talk about Clover Health, that we're done with the silly jokes. Clover Health is a big data AI-infused insurance company. It's focused on being a Medicare provider for those aged 65 plus. Clover was brought to market via SPAC by Chamath and the gang as IPOC, and given his track record so far with his previous SPACs, Clover immediately got on my watch list. And his conviction is strong, as there was recently a 13D release that shows that he owns 30% of the company now, as well as the CEO owning 37% of the company. Do you think for 1 second these guys are going to lose money on their investments? I mean, it's quite risky considering the market cap of the company is already $5 billion, so they have an immense amount of money in this stock, and I just don't think they would risk that type of capital, on something they weren't very sure about. So the stock has moved tandem recently with many SPACs that we've seen in the past. It saw a run up from 11 to 17, which was pretty reasonable price action for most of Chamath's SPACs and other SPACs. And it ran to 17 over the course of a few days, which was probably too much too soon. A lot of traders took profits, I'm sure, at 17, and the price has recently fallen below 14, where I think it's starting to base. Unless we see a serious market crash, that's obviously out of our control, but there's strong buying support for the stock in the mid-13s. So I believe Clover won't see below $13 a share, at least in the short term, unless we have incredible volatility that I'm not expecting. I was glad to be able to lock in some solid profits at 17 from my initial investment at 11. But I have now been soaking up any share under 14 and feeling very solid about my position at a 14.10 average. I think the recent price action has been representative of market makers, aka suits, trying to shake out bag holders from the $15 to $17 range so that smart money, aka corrupt money, can load their shares on the cheap and make bank as they always do. So the bottom line here is, when you invest for the long term, you cannot look at the price action on a day-to-day basis. If you're day trading or swing trading, then yeah, obviously you need to stay in tune with the price action because your stop might get hit, or obviously there might be an opportunity to take profits. But when you're investing in a company for the long term, there's just tons of games that big money plays and their one mission. Their one mission is to make you respond emotionally to the price action. So this is just a quick lesson in the middle of a video. Sorry to get sidetracked. But the one mission of market makers is to either get you to buy shares at an all-time high when it's going to tank, or get you to sell shares at an all-time low when they're going to let it rip. Right now, Clover is in the accumulation phase. Market makers are trying to load up shares on the cheap so that they can later let it rip. So if you're holding Clover from a 15 or 16, I would almost be more bullish with this price action because it's showing me that the market makers are loading below your average. And trust me, big boys are not going to lose money when they do that. They're going to let it rip to $25, $30, and then they're going to start putting out PR everywhere about how it's the best company ever, how it's growing incredibly. And then guess what? They'll sell their shares to the general public, and then they'll let it tank back to 20, and then they'll start accumulating again. So if you're in Clover, I would average down or hold your shares. I'm obviously not a financial advisor, so take what I say with a grain of salt. But just know that there's games that these market makers and smart money play to get retail investors to react emotionally. And I have, made plenty of mistakes due to price action that they've caused before. But you live and you learn, and that is why I'm holding strong on my Clover shares. Okay, so now let's talk about Clover, the company. So Clover is operating within a massive market, a massive demographic, which grows by 10,000 people every day. The 65 plus age group is the fastest growing age group in America, and that's the age group that's entitled to Medicare insurance. Insurance is an industry which is ripe for disruption, as I'm sure we all know. Clover is a pretty small company currently and only operates within a few counties in America right now. I believe it's about 37 counties. A good sign here is that they're capturing very strong market share within the counties they operate in. So as they expand at scale, they should grow their user base exponentially. They currently have 50,000 members, and Clover aims to triple their geographic footprint in 2021. If they can capture similar market share in the new counties they will operate in, the sky is really the limit for Clover stock because their growth numbers are just going to be off the charts. I said Clover was a disruptor in the insurance business, and it aims to do this by providing point-of-care systems that use big data and AI to not only improve the insured, aka patient care, but also reduce costs for the hospitals. So it's a synergistic, it's a win-win for both parties. The hospital is able to operate more efficiently, and the insurance is thus then able to be cheaper. This is able to be accomplished through Clover's ability to collect data on the 65 plus population, which is a good population to collect health data on because they are more frequently going to hospitals than people in other age groups. With this data, they can make predictions about the types of tests that should be done in order to improve patient care. For instance, if a patient is presenting signs of being pre-diabetic through simple blood tests or something like that, the Clover system would alert the doctor or nurse practitioner to run tests and could provide care and guidance that would potentially nip the issue in the bud for the patient. This allows the healthcare side to not have to run tests that will ultimately be futile, or maybe push them to run a test that would be critical for the patient's health. This is, of course, a very general description for how the company uses data to improve outcomes, but I'm not a health professional. If there's anybody watching this video that has experience with Clover or knows how they could use the data to improve patient care, please drop a comment below. Let me know. I think I'm only comprehending the tip of the iceberg, what they're capable of here. So there's a few reasons I'm bullish on Clover in 2021. First, they have immense geographical growth opportunities within the fastest growing demographic in America. Second, they are profitable on a per unit basis with decent margins and predict to become overall profitable in 2023 as they expand their market. The insurance business is not an easy business to get into. It's not easy to compete with these big boys. So this is one stock that I'm actually okay with investing in before they're profitable. Usually I like to pick tech stocks, even if their PE is off the charts. Usually if they're a high growth company, I don't even look at PE. I care that they're turning a profit though, because a company that prioritizes profits, I've seen in the past, has done very well. An example of this is TTD. TTD, the trade desk, has been profitable since the start, and obviously the stock has just 20 bag, 30 bag since their IPO. I was able to capture a 5 bag on that since March. Just recently took a little profits, which I don't know if it was the right thing to do, but again, we live and we learn. Rolled some of those profits into Clover, which I think is now another high growth opportunity. So we'll see how that plays out. As they expand their market, this would lead to margin improvements and they will be able to reduce costs. So it's like a runaway effect. The more they expand, the more money they make, and the more they're able to reduce costs. Third reason why I'm bullish on Clover is that I think big data / artificial intelligence will become an investing theme in 2021. And at some point this year, I think we'll see multiples assigned to any company associated with artificial intelligence receive immense multiples for their potential disruption opportunities. Clover's one possible stock that will be in that mix. I'm not an artificial intelligence aficionado, but my friend who works in the industry says they have solid tech that should work well at scale. Shout out to Max, thank you. So one thing to look at in the artificial intelligence sector is obviously NVIDIA is a big leader in that industry. And if we take a look at the recent chart for NVIDIA, we see that it's been trading in a range between 550 and like high 400s for quite some time. Now, one thing we know about stocks on a technical level is the longer the base, the longer a stock consolidates at a certain price level, the more violent the move in either direction will be. And do we really think for a second that NVIDIA is going to crash? No, this is a blue chip tech stock. NVIDIA is basing right now at 500. It's going to break out. I have a big position in NVIDIA in my Roth IRA where I tend to own more blue chip type stocks. But yeah, so when NVIDIA breaks out, and I think the rest of the artificial intelligence sector will run with that as sympathy. So the final reason, and I think the most powerful reason I'm bullish on Clover, the thing that gives me the most conviction is that this has 10x potential, or at least double this year, is that they have the potential to build a strong moat. Now, moats obviously are different now than they were in the past, and I've been thinking about this concept of what type of technology has a moat. So this moat will be accomplished for Clover through the concept of network effect, which is to say the more people insured and the more medical professionals that use them, the better the product actually gets, the better and the cheaper the product actually gets. Being able to gather data at scale will make Clover very hard to compete with, as they will simply be able to provide the best care and actionable insights for doctors as they collect more data. And I think they're going to benefit from first mover advantage in this space and in this demographic. Another example of network effect for a former investment of mine, just for context, can be seen with CrowdStrike. CrowdStrike has a very powerful network effect because they collect data on cyber attacks instantaneously across all their clients. Their software learns about the cyber attack and thus becomes stronger, which means that any enterprise that's looking to, add CrowdStrike onto their cybersecurity stack knows that CrowdStrike already learned a lot of threats that affected their other clients. So CrowdStrike's program, cybersecurity program, gets better and better as it faces more and more threats. So this type of network effect where a product gets better and better the more users use it can cause a runaway effect and can cause exponential growth. And the way we're valuing disruptive technology these days, I believe Clover will develop this type of moat for the Medicare space, the 65 plus Medicare space, and take a very strong piece of that market share, disrupting big insurance companies, and while also potentially expanding into other demographics long term. That I'm not sure that they'll do, but just taking a piece of the 65 plus pie is just so much money. I mean, the market is just so much bigger than 5 billion. So the sky is really the limit for Clover. So yeah, that's my bull case on Clover. Let me know what you guys thought about the video. Are you bullish on Clover? I know there are quite a few bears out there, which is okay. When I wouldn't question a bear's intelligence here. It's just something that I think is going to do very well this year. Yeah, so please drop me a like, hit subscribe if you like the video. And yeah, hope you guys invest, share your ideas, and of course, as always, happy bagging, folks.